Bitcoin just reached a market cap of around $1.2 trillion, and this makes Bitcoin the 10th most valuable asset in the world, just placing it below Meta, which is worth just slightly more, and silver, which is worth 1.3 trillion. We're very close to even rising up in the ranks much further and overtaking Meta and even the entire silver market. So what is currently the most valuable asset in the world? That is the gold market. Gold is currently worth $14 trillion. Then we have Microsoft, which is worth $3 trillion. We've got Apple, which is worth $2.7 trillion. Despite the fact that we have had so much negativity, all of the media companies, the banks, the government agencies that said that Bitcoin was only for scammers, for fraudsters, and it didn't have any real value. Right now, we're seeing that those same institutions, those same companies, the same people that were against Bitcoin are now aggressively entering the market and scooping up Bitcoin by the thousands. We are about to see a huge pivotal point in the history of Bitcoin. Now the next question becomes, when is it a good time to buy more Bitcoin? What price should I look at? To answer that question, we first need to discuss how does Bitcoin get its value in the first place? Because a few years ago, when I just entered the crypto space, I didn't understand Bitcoin. I didn't understand the technology. I thought Bitcoin was literally a Ponzi scheme. It was magical internet money with no real value. But nothing is less true, which I will explain in this video. Now let's get into the meat of this video. If you want to see more videos like this, be sure to like this video and to subscribe to my channel for more, because I'm going to be posting more valuable videos and resources to help you to maximize your profits in the crypto space. Now, let's first discuss how Bitcoin gets its value. Like anything in the economy, it is all based on supply and demand. So let's first examine the Bitcoin supply. When the founder of Bitcoin, Satoshi Nakamoto, created the Bitcoin protocol in 2008, he made it in such a way that there will always be a fixed supply of 21 million Bitcoin. It is not possible to create more Bitcoin than that. And why is that significant? Because with any asset in the world, we can almost create more. For example, more houses can be built, more stocks can be issued, more gold can be mined, more money can be printed, but no more than 21 million Bitcoin can be created. How is the supply of Bitcoin actually being created? Well, that is being created by the Bitcoin miners. Who are the Bitcoin miners? The Bitcoin miners are individuals and companies that own specialized hardware. In fact, one of my companies is a Bitcoin mining company called Epic Mining. We've got farms all around the world with lots of machines that are verifying transactions on the Bitcoin blockchain. We're basically the banking system of Bitcoin. And for every block of transactions that we verify, reward in terms of Bitcoin gets released to the miners. And every 4 years, this reward gets halved. In 2009, when the first block of Bitcoin was mined, this block reward was set to 50 Bitcoin. So if miners processed a block of transactions, they would receive a reward of 50 Bitcoin sent to their wallet. Then 4 years later, with the Bitcoin halving event, which happens every 4 years, this is how Satoshi Nakamoto created the Bitcoin protocol, then this block reward got halved from 50 to 25 Bitcoin. 4 years later, this block reward got halved again from 25 Bitcoin to 12.5 Bitcoin. 4 years later, this Bitcoin halving event happened again, and the block rewards got halved again from 12.5 Bitcoin to 6.25 Bitcoin. And that is where we are currently in the market, and with the next Bitcoin halving, this block reward will get halved again. So the new supply hitting the market is halved every 4 years, and this makes Bitcoin a scarce resource, and it's becoming increasingly scarce because the new supply is becoming increasingly scarce. And now you might wonder, how long will it take for the last Bitcoin to be mined? Well, because every 4 years a new supply gets halved, it will take another 100 years for the final Bitcoin to be mined, so for all of the 21 million Bitcoin to be in circulation. And after that, no more new Bitcoin can be created. Now let's have a look at the demand side of Bitcoin. So recently we've seen a few major developments in the crypto space. We have seen MicroStrategy, which is a large publicly traded company which is scooping up Bitcoin by the thousands. Basically, they sat down with their leadership team and they asked themselves the question, like, hey guys, we have a lot of money in our bank account. What can we do with that money? Are we going to put it in a savings account and get a little bit of interest? But with inflation, we're probably losing out on a lot of purchasing power, so we need to invest that money. And after doing a very thorough analysis, a very thorough investigation, they discovered Bitcoin as an asset class, and they decided to go all in and put a lot of their treasury in Bitcoin. In fact, they even borrowed money from the banks and other investors to scoop up more and more Bitcoin. So I highly recommend you to check out some videos of Michael Saylor, the CEO of MicroStrategy. He's very open and outspoken about his Bitcoin investments, and you can learn a lot from him. Then we've got countries like El Salvador, which announced that Bitcoin is now a legal tender and that they are allowing people to pay with Bitcoin within their country. And they're also buying up a lot of Bitcoin on the balance sheet of their country. So we have countries that are now buying into Bitcoin. We also have presidents in many parts of the world, mostly Africa and South America, which are tired of being dependent on the US dollar as their main currency, and they want to have another asset that they can build their economy upon. And they're increasingly seeing Bitcoin as a way to protect the individuality of their country. So El Salvador was leading this move of countries that are adopting Bitcoin. Now we also see large institutions like BlackRock that are entering the space. BlackRock is the largest asset manager in the world. I think they have over $10 trillion of assets that they're managing, and they are now very outspoken about wanting to offer Bitcoin products to their customers. So recently they got a Bitcoin ETF approved, which is basically a fund on the stock market, and instead of people buying Bitcoin on an exchange themselves, they just buy a share of this fund on the stock market, and then BlackRock manages everything for them, and you can easily trade in and out of these funds. So this is a way for BlackRock to offer Bitcoin exposure to their traditional customer base who doesn't want to go on all of these new flashy, complicated exchanges, but just want to buy it on the stock market. So this has also resulted in a lot of new adoption and influx of money into the Bitcoin space. Also, for retail investors, the education is just getting much better. For example, my YouTube channel, but there's a ton of different YouTube channels out there which are educating people about Bitcoin, how it works, about the market cycle. So people are becoming increasingly educated, and for every investor in the space, you see a network effect happen. So every investor shares it with their family, with their friends, and they pull in more and more people into the space. So slowly but surely it's snowballing and more people are entering the space. So we have a limited supply and we have an increasing demand. So if you look at simple supply and demand economics, the chances are quite high that we might see a nice increase in the Bitcoin price over the long term. I personally believe that we are still very early in the crypto space. Why? Because I'm looking at the crypto space as something similar to the emergence of the internet space. Actually, if you look at the adoption of the internet, well, the internet was invented in the 1950s. It was a military technology. Later on, it got adopted by a group of academics which started to use it for research. And only later, like 40, 50 years later, first people within their own homes started to use the internet. And that's when we saw a huge boom of e-commerce and many different internet platforms, which even drove the adoption of internet further. And now the internet is an essential integrated part of our daily lives. I mean, some people cannot even navigate the streets anymore without Google Maps or Waze or their phone to navigate. Similar translation of one language to another language. And now with artificial intelligence, we're getting even more and more lazy. It's even taking over our jobs. The internet adoption shows us that it can take quite a long time in order for technology to become adopted by the masses. And I remember when I was still doing my international business degree, one of my marketing professors would show me this curve. This is called the adoption curve. Basically, the adoption curve is saying that whenever a new technology is launched or whenever a new product is launched, first it's adopted by a small group of people called the innovators. These are basically the academics, the technology enthusiasts. And later, slowly but surely, the early adopters are arriving in the space. They are a bigger group than the innovators, but still a relatively small group compared to the rest of the market. Then the early majority starts to enter the space, the late majority comes in, and then we have the laggards, the older people, the ones that are a little bit more reluctant to technological change and new things. Right now, I believe that we are in the early adopters phase of the crypto market. If you look at the overall percentage of the people in the world that are involved in the crypto space, it's still very low. However, I personally believe that this is soon going to change and that the early majority and the late majority will soon enter the crypto space. Why? A few months ago, we saw the approval of the Bitcoin ETFs. And this is a very significant event in history. Why? Because these Bitcoin ETFs, they bridge the traditional world of finance, so the institutional investors, the older investors that are used to investing on the stock market, with the new world of investing, which is highly related to the blockchain space, the crypto space, and it basically bridges the two. The big institutional investors or the big asset managers like BlackRock, Vanguard, that are all offering these ETFs to their customers, they understand that this bridge is needed for the two worlds to meet. We have seen a whole bunch of ETFs, a whole bunch of Bitcoin ETFs already being approved. We're also hearing rumors that Ethereum ETFs will be created, that Ripple ETFs will be created, Solana ETFs. So now we might see a whole bunch of Bitcoin related products that will be released on the stock market by these large asset managers. And all of these asset managers are hungry to attract new customers, and they have massive marketing budgets to attract those new customers. So I think in the next bull market, we will see crypto and Bitcoin everywhere. I think every Formula One competition will have so much crypto ads running through it, sponsorships, every tennis competition, every soccer competition, every American football competition, every basketball competition. We are going to see Bitcoin and crypto everywhere. And I think now in this bull market cycle, I think a lot more people will enter this space because it's just inevitable. You cannot go around it anymore. And when that is going to happen, when the early majority and the late majority are going to enter the space, meaning that your mom, your neighbor, your aunt are all going to be able to invest in Bitcoin and all want to get a slice of the pie, that means that many more billions and probably even trillions will flow into this space, making Bitcoin an even more valuable asset class than it is today. Look at Bitcoin right now and we look at some charts, we can already see that there has been a lot of adoption of Bitcoin already. So here on my screen, you see the total number of transactions happening on the Bitcoin network. You can see from 2008, 2009, when Bitcoin was released, to the moment we are right now, there has been a very big increase in the number of transactions happening on the Bitcoin network. That is exactly what we want to see, because that is what is giving value to a network, its adoption. For example, what is giving value to Facebook or Meta as a company? That is the people that are on it, that are interacting with each other, okay? That is creating the value, the network. And you want to see more adoption of the network. You want to see more people entering the network. You want to see more people making use of the network. Here we can see another chart. You can see the number of unique addresses that are being used to transact on the Bitcoin network. So you can see again, between 2009 and 2018, there was a massive surge in new wallets. So new people discovering the Bitcoin network and doing transactions on the network. So after 2018, we saw that there was a little bit of a cyclical nature. So every bear market, we saw some people basically leave the network because they got fearful of Bitcoin. And slowly but surely, when the bull market arrives, you see a new number of people entering the market again. And this cycle keeps repeating itself. But overall, the trend upwards. So meaning that over time, we're seeing more and more addresses transacting on the Bitcoin network. Bitcoin is a very volatile asset, meaning that in the short term, the price of Bitcoin can go up a lot, but it can also go down a lot. And that is because people are generally very emotional when they're investing. When they're looking at their portfolio on their phone and they see that their portfolio is in the green, they think they're a genius, that they've outsmarted the market. So they buy some more of the investment that they've just purchased. When they look at their phone and their portfolio is in the red, they become sad and they panic and they think their investment might go to zero very soon. So they start to cash out and pull their investment out of the market with a loss. And that's the cycle that most investors go through. Whenever the market is in the green, they become greedy and they buy more. Whenever the market is in the red, they panic and they pull their money out of the market. So it's a very emotional driven market. And one of the best ways to gauge the overall sentiment of the crypto market is with the rainbow chart. So here on my screen, you see the rainbow chart. Basically, it plots the price of Bitcoin, which is the black line, and it overlays it with the overall sentiment in the crypto market. So here, the red zones, the orange zones, those are the zones where people are most greedy and euphoric, and the green zones and the blue zones, that is when people are fearful. You probably have heard of the quote from the famous investor Warren Buffett, who is one of the wealthiest people in the world with a net worth of over $100 billion. He says, be fearful when others are greedy and be greedy when others are fearful. Basically, yeah, when everyone else is pulling their money out of the market, that's when you should be buying. And when everyone is betting their whole life savings on Bitcoin, that's actually when you should be taking profits. But this sounds very easy, but in reality, it is quite hard to do the exact opposite of what your emotions are telling you to do. It's very hard to sell when you see that you're getting richer and richer every day when your portfolio is in the green. On the other hand, it's very hard to buy into the market when it's a complete bloodbath and you only see the price tanking day after day. So that's why for most people, easiest thing that you can do is to dollar cost average into Bitcoin. What does that mean? Well, that means that you're going to put a fixed amount of money into Bitcoin, regardless if the price of Bitcoin is up or down. Okay, this completely takes the emotion out of the investing game. And I want to show you a tool that I found on the internet, which is called the Bitcoin dollar cost average calculator. There's actually a few different varieties of this calculator on the internet, but yeah, you can plug in different values here in this calculator to see the effect of dollar cost averaging into Bitcoin over time. And this is mainly based on historic data. So if you would have started on the 1st of January 2014 and you would have ended on the 3rd of March 2024 and you would have just bought $100 worth of Bitcoin every single month, then you would now have an investment portfolio worth $654,000. In total, you would have spent $12,300 on acquiring this Bitcoin. You would have acquired 10.5 Bitcoin and you would have had a return of around 5,200%. Okay, that is insane. That is in a period of just a little bit more than 10 years time. And that is the power of dollar cost averaging and taking your emotions completely out of the game. I want to share something else. So Bitcoin has been named the best asset class of a decade. And let me quickly pull up the numbers that Bitcoin has generated. So over here on this chart, bitcoinmonthlyreturn.com, you actually see all of the returns of Bitcoin from 2011 all the way to 2024. Here you see this column contains the average monthly return of Bitcoin, and here you see the total yearly return of Bitcoin. So what we can see that in 2010, Bitcoin generated around 255% per year. In 2011, 630% per year. In 2012, 119%. In 2013, 840%. And then of course we also have a down year every 4 years, minus 64% in 2004. Then we have in 2015, 48%, in 2016, 93%, in 2017, 331%. 2008, we have a down year of minus 101%, 2019, 91%, 2020, 174%, 2021, 76%, etc., all the way up to 2023, 108%. Look, Bitcoin has generated on average every single year around 170% returns. That is unprecedented. No stocks, no real estate or bonds can actually compete with these yearly returns. Of course, if you want to get these returns, you need to accept that the markets are very volatile, meaning they can go up, they can go down, and it can become a very emotional game. But that's why if you understand the long-term performance of this asset class, or you understand the historical performance of this asset class and the supply and demand economics of it in the future, then you see that there is still a lot of room to grow. And the easiest way to get exposure to this asset class is by dollar cost averaging into the market. There is one thing that I want to mention, that is your investments are meant to give you peace of mind, okay? So never invest more than you're willing to lose. Never borrow money to get into the market. You don't want to create additional stress for yourself. So if you're realizing that you are investing more money than you can lose, then maybe you shouldn't invest that much money, okay? Maybe you should start smaller. Maybe you shouldn't look at your investment portfolio every single day. For example, when I looked at my investment portfolio every single day, I became super emotional. I became very greedy on the green days and I became very sad on the red days. And as a result, I made a lot of stupid mistakes in the beginning. Nowadays, I only look at my investment portfolio once every week, sometimes even once every month, because I know and I'm confident that over the long term, my investment will grow as long as I am consistent, just like the Bitcoin dollar cost average calculator showed me. So, all right, I hope that by now you have a much better idea of the supply and demand economics of Bitcoin, and specifically, you've heard a little bit more about the adoption of Bitcoin and what we might expect to see in the near future. You've also seen a few charts which show the adoption of Bitcoin, which is happening in real time. And we also discussed dollar cost averaging and the fact that Bitcoin was named the best asset class of a decade because there are very few assets that can match the returns that Bitcoin has generated over the past few years. So I hope that you like this video. If you do, make sure to like this video and subscribe to my channel for more, because I'm planning to post a whole bunch of videos in the next few weeks with valuable insights and resources that will help you to maximize your profits in the crypto space as an investor. All right, so make sure to subscribe, and I'm looking forward to post the next few videos. I also linked 2 very valuable videos which I highly recommend you to check out over here. And yeah, I'll see you in the next one. Peace out.